All right, folks, it's 12:30 and it's time for a live stream Tuesday. Yeah, there is a lot going on. This doesn't feel straight, so I'm just gonna adjust here. A lot going on, especially in crypto. Bitcoin is, let me check. Where is it at? I'm waiting for it to hit 100K pretty much any day. Yeah, almost $93,000. $93,000. Um, all kinds of crypto investments are surging higher this weekend. Out of the blue, XRP, which is in our silver tier, like suddenly just jumped, I don't know, 30, 40, 50%. And even smaller ones like Tezos, which I named as one of my top investments for 2024 out of the blue. Yeah, it just jumped 50%. Let's see. I think Coinbase is, very near its all-time high. Yeah, okay, it's $100. Not very near, but MicroStrategy just keeps making new highs. It's all going on, folks. It's all happening. And it's definitely, for sure, centered primarily right now around crypto. If AI was the hot thing 6 months ago, it's definitely crypto. And based on everything I understand about Bitcoin, it's only going to get hotter. It's only going to get hotter. So this live stream, let's talk about what is happening, why it's happening, how it's happening, what is going to unfold over the rest of 2024, why, in my judgment, my opinion, 2025 is going to be even more. I think the world is going to be obsessed with Bitcoin and crypto in 2025. What it also, like, importantly, there is a secondary effect that I can hear already, which is Bitcoin and crypto are starting to suck the marrow out of a lot of different assets. And we'll talk about that. We'll talk about that because that is going to matter definitely for other stocks, for some other crypto, definitely for the corporate bond market. There is going to be a knock-on effect. Crypto is not going to go up without something going down. It's not going to be like this goes up and everything goes up, because it is definitely taking and capturing market share in terms of the world of assets from other things. All right. But before I get into all that, let me do all of the usual legal disclaimers and disclosures, which is that this live stream and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion, information, engagement, and entertainment. I think most people use it as entertainment. Although, hey, Fannie Mae, that's good entertainment, right? What was it at when I did that live stream? $1.50? It's over $3 now. Some of those preferreds in the gold tier, they're up a couple of 100%. Volatile, but hey, you want big gains? That's the price you have to pay. Oh, I never did this one. All ATG Digital may contain errors, oversights, and mistakes. We are human beings. We are not perfect. Understand that investment operations have significant risks. What's an investment operation? Buying or selling a stock, buying or selling crypto, one of the option trades. Yeah, those are all investment operations. They have significant risk and can lead to loss of your principal. Loss of your principal is equal to losing money. So if you don't like risk, you don't want any chance of losing money, don't engage, folks. You want a sure thing: checking accounts, savings accounts, certificates of deposit. Those are the things that give you sure things. Next, I, the owners, employees, contractors of ATG Digital, own, trade, transact, and securities are mentioned in this video, and all content from ATG Digital Next, we do not take money from companies, crypto sponsors, token sponsors to recommend their stocks or crypto tokens for better and for worse, for gain and for loss. Whatever you get from me, from us, is our own view of the world. It's independent, it's unique, it's us. We publish a daily Substack where we're closing in on 6,000. I mean, we got to like something like 3,000 or 4,000 pretty fast after starting ATG Digital, and since then it's just been burbling along, losing a few, getting a few. So if you're not part of the Substack, go subscribe. We publish it weekly, and generally when we're working, we don't publish on holidays, and we don't publish when we're off, but it's there. And oftentimes the Substack is where I really work out some of the ideas that I bring then onto YouTube. So if you want like a little heads up on what's coming, you want to be ahead, the Substack where you'd go. Obviously I'm on YouTube. Baldman Speculating Podcast, I have to like categorize that being as temporarily inactive because I haven't done one since I think September. But I have ideas. I just between the content we're putting out on Substack, at ATG Digital, on YouTube, on Facebook, on X, it is just difficult to find the time to do it. Social media, I am very active on X. Marginally active on Instagram, Facebook. We're pretty active, so subscribe to all of those places. I do a monthly Facebook Live event where I do because there's a slightly different group of folks that are on Facebook than there are on YouTube or on X. And I also want to mention that whenever Bitcoin crosses over that 100K threshold, presumably, I'm awake. Presumably, I can get to a computer. We're going to do a live stream. I mean, I have to have access to a computer, so I can't do it the minute it happens. But I have it scheduled, and I originally had it scheduled for, I think, last Wednesday because it just looked like, it was ripping higher and it could hit 100K before pulling back in all likelihood. But then, of course, it went back down. But it's going to happen sooner rather than later. I don't think it's going to take a month. I know some people thinking like by year end. My sense is more like by month end. We shall see. So I keep pushing the live stream out, and that live stream is going to be my first chance. I'm going to do it simultaneously on YouTube, Facebook, and X. So you'll see a listing on YouTube, and if you're on Facebook, you'll see that as well. And then finally, if you want to know about when we push out the trades that I come and talk about here, I mean, pretty much all of the trades that I elaborate here on are in one of the ATG Digital portfolios. We have silver, we have gold, we have diamond, platinum, and purple tier. Check us out at atgdigital.media. That's where you can subscribe. All right. So post-election, it's been a crypto sort of like reawakening, what I don't know what you want to call it. Bitcoin, of course, shot up. And initially it was pretty much Bitcoin. But, other crypto investments have begun to participate. MicroStrategy pretty much, I think, went right along with Bitcoin from the very beginning. And hard to believe that MicroStrategy is now wow. Let's start putting this up. Start sharing some things. It's now a $84 billion company and $419. Wow. That's ridiculous. I mean, we put MicroStrategy into what was then True Momentum when I was at Banyan Hill at, let's see the price here. You put that in at $16.91. So 2,380% and counting and counting. So, I mean, this is totally blown away what Bitcoin itself has generated. And I did a live stream. When did I do that? I think it was about 2 weeks, 2 weeks ago. It was, yeah, September 17th. So actually 2 months ago on MicroStrategy. And I remember when I was doing that live stream, there were a couple of folks on. I was like, hey, are you aware that MicroStrategy is down? I think it was 3%, 4%. They just announced their earnings. And I was like, I'm talking about something that's going to unfold over a year. And you're talking about the price right now. But obviously, I mean, from September 17th, if I were to do this, yeah, I mean, it's up a lot. I mean, we don't need to go on and on. But let's just use MicroStrategy as a way of sort of like talking about Bitcoin, crypto in general, what is going to unfold, how it's going to unfold, why it's going to unfold. Now, a lot of this, I've talked about it earlier, right? I mean, now many people will assign President Trump winning the election as the reason for Bitcoin. Not in my judgment, not in my opinion. I have laid out for a while, which is that there is a halving cycle that happens every 210,000 blocks, which approximates to about every 4 years. The new supply of Bitcoin gets chopped in half. And there is always a response. There is a price response because of this chopping of the new supply of Bitcoin. There is always a response. The amount of the response has varied for the 4 halving cycles that we've seen. So 2012, 2016, 2020, and we're obviously in the middle of the 2024 halving cycle. So we have 3 previous halving cycles. I think 2012, it was, astronomical. 2016 was pretty astronomical, not quite as astronomical as 2012. 2020 was somewhat subdued, a little bit tepid even. Like, I mean, in 2012, if you measure things by sort of like by exponents, and I let me see if I can get this chart up here of someone that I recommend you follow. This is the person that put the idea into my head of that Bitcoin is a cycle, and it is a cycle because it is a algorithm that has some very defined characteristics. Why can't I find it? Where's plan B? All right, there it is. Okay. So this is a model that's called a stock to flow model. And some people hate it. Some people blame it for all kinds of things. It's not something that you can sort of just trade along with. It's a very rough approximation. But one thing you will see is that pretty much in every halving cycle, you see Bitcoin jumping in exponent. In 2012, we go from 10 to 100. And then from 100 to 1,000, then we get to 10,000. Now in 2020, we kind of didn't get to 100,000, but the model would suggest that that was sort of like the upper end of where it could be. And so people think that hey, well, there must be something wrong with the model. But the upper end of the model in this cycle points to about 1 million. And that's not a guarantee, that's not a certainty, but in this cycle, we definitely have way more going on than we did in the 2020 cycle. I mean, in the 2020 cycle, we had nothing enormously new there. I mean, Coinbase had been around, GBTC had been around already from the 2016 cycle. Yeah, I mean, I mean, more people were aware of Bitcoin, but it wasn't like a huge tsunami of potential demand and new ways to get in. Versus in this cycle, I mean, I'm lost for how many different things we can point to. I mean, there's obviously the Bitcoin ETFs. There's obviously MicroStrategy. Then there are copycats of MicroStrategy. Marathon Digital is one, Similar Scientific. There's, I forget the company out in Japan that is copying them. And more are coming. I mean, and so far, all the copycats for MicroStrategy are smaller. I mean, imagine when like a large company comes in and they want to put 100 million, 500 million, and then there's 3 or 4 or 5 or 10 of those. So, I mean, in my opinion, that 1 million mark is very much in play for this cycle. It doesn't mean that it'll sit there at 1 million. It just means that that'll be somewhere near the peak. And if in 2016 we can go above, sort of like that modeled level of 10,000, and we got to nearly 20,000. If it did that again, we're talking about 2 million. Like, I mean, so people have called me crazy, and some people say it's irresponsible. So if you think it's irresponsible, shut this live stream down. Please go read somebody much more reasonable, much more responsible, whatever. I'm entitled to my view, and that's my view, which is that based on everything I understand about Bitcoin, it looks like the potential peak is somewhere about 1 million. Doesn't mean it's guaranteed to get there, but it can get there. And it will be driven by the sort of like demand response to price. The nature of Bitcoin is that the higher the price goes, the more people are going to be interested and the more buyers will come. And as they come, well, they'll drive the price even higher, which will drive even more people to be interested, even more people to want to buy it. Of course, the price will be even higher, so they have to bring even more money to it. And that is the way that we got to from 1,000 to 10,000 in 2016. I mean, if you look at the price, like what? I mean, it was a little over $100, right, in 2015. And it was, yeah, I mean, well under $1,000 in 2016, and we got to nearly 20,000. So that price driving demand, demand driving price, that circle, if you will, once it starts taking off, I mean, yeah, it can go definitively far higher than what anyone thinks. No one in 2016, if you ask them, would have ever imagined that the top in the 2016 cycle would be, forget 10,000, anywhere near 20,000. So people wanting to be realistic, hey, you can be realistic, you can set whatever top you want so you can sell out, etc. But it is very clear that because of the mathematical characteristics of Bitcoin, we're going to see very definitive cycles that work around and that operate around the halving. And the halving cuts new supply. The initial reaction is that, well, there's a group of people that need to sell as a result of it. They are the Bitcoin miners because they got to operate their companies now while they're getting half the revenue. So they start selling. That causes weakness post the halving. Then that weakness peters out. And now the supply shock begins. My study of the price is that the supply shock begins somewhere between the 6th and 7th month. And we are right at the 7th month. In fact, the halving was on April 19th, and we are now at November 19th. And it is no shock that Bitcoin is at near all-time highs, because that's the history. If you go back and look at 2020, 2016, and 2012. So that's where it is. Now, when Bitcoin keeps going up, it tends to produce liquidity for the entire crypto economy. There's always somebody selling as someone's buying. So, and the folks who are selling Bitcoin to extract liquidity in fiat or US dollars, well, I mean, these folks know crypto. I mean, so what are they doing? Well, I mean, I'm sure some of the money is being set aside for whatever, hey, to buy Lambos or whatever it is that, people do with their Bitcoin wealth. But the other money is going into other trades, right? I mean, and so we are going to see as 2024 finishes out, as 2025 unfolds, and especially like once we get to 100K, that will light up the general population. If you go and look at Google Trends, you will see that searches for Bitcoin are like almost nothing. Well, let me show you Google Trends. I mean, they are nothing compared to where they were in its history. There's like maybe a tiny little bump. Okay, let's do this. This is for the past day, but let's go back and look, right? And what's the point of showing you this? Which is that it tells you that right now, the vast majority of people are not paying attention to Bitcoin. Bitcoin's at an all-time high. It's at $93,000, give or take whatever. And not that nobody cares, but the general population is not aware and is not that interested. Why? Well, I mean, because the last crypto winter was brutal. Bitcoin went from like nearly 70 to 15,000. I mean, pretty much every token coin collapsed in price. And so that memory is what people are still have. And so when new information comes out, research shows, psychological research on financial markets shows that it drives like this dissonance in people, and it doesn't register. And only after some psychological barrier or marker is overcome do people now register this new information, and now they become interested. And this is very similar, if you will, to kind of like 2016. And I can relate this personally. Like, I'd been tracking Bitcoin for a while, and after it collapsed from, I think from 1,000, I think the peak after 2012 was 1,132, give or take a few dollars. It went all the way back to 130. I'm like, it's done. It's dusted. It's over. This thing was a fad. It's a bubble. And so when it started to rise in late 2016, early 2017, I watched almost like, be like, what is going on? Like, why is it rising? Why is it rising? In those days, I didn't really understand the halving cycle. I hadn't done the work on it. And it was quite early. But the truth is that for the vast majority of the world, for the vast majority of people, it's still early. They don't know anything about the halving cycle. I would guess that people know the word Bitcoin, but they don't know that the supply of Bitcoin is finite at 21 million. I mean, try this out when Thanksgiving's coming up. And so, go ahead and quiz the folks you're having Thanksgiving dinner with and ask them, hey, have you heard about Bitcoin? Question one. My best guess is that 8 out of 10 people will say, yeah, I've heard of Bitcoin. There'll probably be between 2 and 3 people be like, Bitcoin? Well, I don't know. What is that? They'll ask like, is that like, a new piece of technology? Then you can say, well, how much do you know about Bitcoin? Do you know how many Bitcoin there are? And be like, I don't know, 100 billion. People will guess wildly around it. Then you can go get more technical and say, well, do you know what the halving is? And I can tell you that you're going to get one, and that person out of, like, I mean, we're talking about general people. My point of all this is that we're nowhere near the top. Because I have seen friends text me, it's like, do you think this is the top, Paul? Do you think like everything will sell off right before 100K? I'm like, we're not anywhere near this. We're not anywhere near this. So we've got a long way to go. And you can see that spike, that big spike you see here, right here. Yeah, I mean, that's the 2017 spike. You can see what happens when everyone comes to buy Bitcoin because they feel like they missed out. They don't want to miss out anymore. Everyone that they know is talking about it. They know someone that has made a lot of money in it. They know someone that's just bought it, and they're going to want to own it. And at that point, the price is kind of almost irrelevant. And somewhere after that will come the top. Somewhere after that will come the top. So that's kind of like, me laying out what's going to happen over the next 12 months. The top, based on my study of price of Bitcoin, happens somewhere at the end of October to early December. And from there, we are to see what will be the behavior of Bitcoin in the next sort of like, crash. Because whatever price everyone, when they come to buy, they take it to, we've also seen in every cycle, 2012, 2016, 2020, we've seen a huge Bitcoin crash. But that's all for later. Let's get back to what is happening right now, which is that we've got Bitcoin setting up to make a series of new highs that goes on essentially for approximately another year. Assume that I'm right, or you can assume whatever price you wish. The peak is going to be somewhere in and around plus or minus $1 million. And so then you like extrapolate that out, to things like MicroStrategy. I mean, by December of next year, how many Bitcoins will MicroStrategy have? Then you'd multiply that by 1 million to come up with, well, what will people value it at? All these are unknowns at present, but one of our incredible team members, they put together this spreadsheet of Bitcoin miners, and it allows me to kind of like show some of the sort of like the multiplier effect, if you will, of like looking forward and thinking in the way that I'm thinking. So Bitcoin miners are going to be a huge trade in 2025. But in this cycle, the Bitcoin miners are like in a completely different position than they were in the 2020 cycle, when they were unprepared for the crash. They didn't have a lot of money. People went bankrupt. This time around, Marathon Digital, which I'm just going to use as an example, Marathon Digital is in our gold tier, and they are a hybrid between MicroStrategy and a regular crypto mining company. So that last line there, you'll see they mined 717 Bitcoin last month. And then, they've got, you can see, things like their capacity. You can see that their current market capitalization is $6.5 billion. Dan, who put together the spreadsheet, has things, to sort of like come up with valuations relative to their computing power. But I like simpler things. So, I put in a assumption of $1 million, right? Assuming that I'm right, at $1 million, right, the 717 Bitcoin that they are mining per month, there's obviously the assumption that they'll keep getting 717, but they might have less, they might have more, but they will be generating $717 million worth of revenue per month, right? That's what, $8.4 billion worth of revenue, right? 8.4 billion plus. Then they currently hold 27,562 Bitcoin. Assuming that, you know, they don't hodl additional Bitcoin, this 27,562 Bitcoin would be worth $27.56 billion. What will the market pay for a company that is generating $8.4 billion in revenue, has, I don't know, $20-30 billion worth of Bitcoin? Yeah, whatever the number is, it ain't going to be $6.5 billion. It's definitely not going to be $6.5 billion. In the Substack that I laid out yesterday, I laid out some of my math. I talked about this. And in the last cycle, where is the part here? Yeah, you can see at the peak of the 2017 cycle, Marathon traded for nearly 50 times its annual sales, 50x. That's how crazy people were to buy anything related to Bitcoin. And why did people do that? Because the market always is looking forward. So at the peak, assuming that, you know, I'm correct, obviously, the market doesn't know that it's the peak. There's enough people in the market that don't know it's a peak, and they will extrapolate that $8.4 billion into the next year. And so that's why they're willing to pay 50 times earnings, because, I mean, you know, the growth rate at that point looks incredible. Everybody wants to own it. I lay out, well, I mean, I don't think it's going to get to 50 times sales. Why? Well, because if I know 50 times sales is excessive, if I know there's going to be a peak, there's other people that know it's going to peak, which means people will come and sell it, but who knows? But at 30 times 8.4 billion, that's by itself $240 billion worth of market capitalization, potentially. 240 billion is 40 times where Marathon Digital is. 40 times. Now, you know, I mean, and that's assuming that, you know, we pay no attention to the Bitcoin that it's holding on its balance sheet. So there are so many of these kinds of trades there where there's just extraordinary leverage that is there relative to either Bitcoin or crypto. That we can see, and they are there in stocks. Obviously, MicroStrategy is levered up in a slightly different way. Marathon, I've just laid it out for you. And then I was talking with Dan, who put together the spreadsheet that I used earlier to explain things. And we were talking about the opportunities, for example, in stablecoins. I'll just do this, and then I'm gonna sort of like stop and then take some questions and comments. Stables, here we go. Okay. So stable coins currently, what are stable coins, first of all? Well, stable coins are coins that essentially are digital versions of sovereign currencies, like, for example, a dollar. All right. I mean, stable coins, why does anybody use them? Well, for one, they keep you in the crypto world versus sending you out into the traditional banking system. So you can essentially just move money within the crypto world. And that then allows you to constantly, use other crypto platforms for borrowing, for lending, or speculating, whatever you want to do. There's other benefits. It's very cheap to send money. A lot of these stable coins are paying far higher interest rates than savings accounts. And it's super fast. You send a stable coin, and it's there in a few minutes. If you scroll down the stable coin list, you'll find that there are some, Tether is the oldest. I believe it may not be the oldest, but it's certainly the biggest, and it's probably the oldest surviving and biggest surviving stablecoin. And they have $128 billion in the stablecoin. I saw a news story saying that Tether made more money than BlackRock in 2023. I don't know if that is true because the folks who operate Tether, they're not a publicly traded company, so we don't have audited financials. But if you look at this, you'll see some familiar names down here, right? You see this? BlackRock. Yeah, BlackRock has a stable coin. BlackRock has a stable coin, and so does PayPal. All right, so you got big companies, large big companies that are entering the space. And if Tether is making more money than BlackRock, we can understand why. I mean, and there's a very easy sort of like way to understand what a stable coin is. Essentially, it is a replacement for a money market account. In the sort of traditional legacy fiat banking world, you'd have a money market account, and you'd use that to send money out. In the crypto world, you would use a stable coin. Robinhood is planning to issue a stable coin. I believe that as Bitcoin starts to hit 100K hurdle after 100K hurdle in the rest of 2024, 2025, you're going to have pretty much everyone want to issue their own stable coin because they want to keep you obviously as a customer, because of course there's a lot of money being made in the world of crypto, right? And those folks don't really want to go out of the crypto world. They're comfortable with it. They like it. And fiat is only really for the places where you have no choice but to use it. So if that's right, I mean, if BlackRock has one, I mean, every major asset management company, is going to end up having one. Fidelity will have one. Schwab will have one. E-Trade will have one. Morgan Stanley will have one. Many will have more than one. I mean, the vast majority of companies have lots of different money markets that pay out slightly different things, that have slightly different features. So we could have thousands of these, and there is a stable coin exchange which is called Curve, CRV, and I've theorized that now Curve is very small, and I would say quite risky. But I would theorize that as we go into 2025, this is going to be a big winner. Why? Well, because stable coins have a peg. What's a peg? Well, for example, a US dollar stable coin is pegged to $1. It's supposed to keep a value of $1. But however, the truth is that the price of every stable coin depends on the demand and supply for the coin at any given time. If somebody wants to sell, for example, $100 million worth of Tether now, right? Like this second, well, it'll destabilize the peg and it'll drop down maybe to 99 cents, maybe 98 cents, 97 cents. And so what people do to try and avoid that, because I mean, at $100 million to lose a penny, 2 pennies, or imagine 500 million or a billion or several billion, to lose that, it's a huge loss. So you go on Curve, and now what you do is that there are some stable coins that will be trading for more than $1 and some that are trading for less than $1. So what you do is you go buy the ones that are trading for more than $1. In the process, you push them down. Yeah, I'm sorry. You sell the ones that are selling for more than $1, and in the process, you push them down. You buy the ones that are selling for underneath $1. In the process, you push them up. That's called arbitrage. It's like when the same thing is trading for two different prices, but they should have the same exact price, and all of that activity will be on Curve. So I mean, their fees potentially could just explode higher in 2025 as we go from. I mean, right now there are. This is the listing of all the stable coins that are out there, at least according to DeFi Llama, which is, I think, a pretty reliable source. It's what I use anyway. I mean, some of these stable coins are pretty small, but you can already see we've got 203 stable coins already. 203 with, the vast majority, of course, are in these big ones. But what we're going to see, if I'm right, is that we're going to see more stablecoin issuers, and the amount in this will go up. I mean, let's say I'm right and Bitcoin goes to a million, right? Well, the amount of money in the crypto economy is essentially going to have 10x'd. 10x'd. I mean, people will be absolutely buying, I mean, they'll be putting money into stablecoins. We'll get to $1 trillion. Heck, I theorize we might even get to, I mean, maybe we don't get to 10 trillion. We'll probably get to 2 or 3 trillion. Curve, the trading on Curve to arbitrage, 500, 700 coins constantly. I mean, it'll be like the foreign exchange market. The foreign exchange market where, trillions of dollars trade every day, and they're all arbed to, I don't know, 3 to 4 decimal places. And in the process, there's a lot of fees that are earned, and it would all go into Curve. So why am I even bringing all this up? Well, bottom line is that there is just so much opportunity in the crypto space as it sort of like ends its crypto winter, ends its bear market, and liquidity is starting to flow into it. And, and we had XRP just jump essentially 50% this weekend. Those are just pure liquidity moves. I mean, because anything that's understood about XRP is already known, which is that, okay, with President Trump winning the election, Gary Gensler is no longer be, in charge of the SEC. The SEC is going to be much more friendly to crypto. So the lawsuits are going to go away. So this is all known. So somebody obviously wanted to get enough position in, but nobody was willing to sell at whatever, 60 cents or whatever. Yeah, they were forced to pay up. They were forced to, I think the high was $1.37. Obviously, short-term sellers came in, sold it down. But you're seeing that again and again, and that's just a liquidity shift. We're not even really into the buying for reasons, buying based on hey, this is the thesis, this is going to be the fees, this is how much is it. We're not even into that yet. All right. I've gone on for a bit, so I'm going to stop here. And I see a few comments. If you have questions on pretty much anything, I'm happy to take it. Rashad, regular live stream viewer. Thank you, sir. Appreciate that. Also, regular viewer, Ms. Puppy Pop. Thank you. And we've got greetings from Philly. Greetings. Thank you, sir. Ma'am. I don't know. Rashad says, always good to see. I'm looking for crypto service, no options. Does ATG offer that? We can't cater to just you, unfortunately. We came over from Banyan Hill, and we had to cater to the people who are willing to give us money and willing to subscribe. So in our platinum, in all of our tiers, there is crypto and stocks, and that's what you can get. We cannot cater to everybody. We do not have the team to customize it for you. So if that suits you, you can go into pretty much every tier. In silver tier, we have crypto. In gold, in diamond, in platinum tier, in purple tier, they're all mixed into both. So that's the state of ATG Digital. The future is so bright. We have to really wear dark shades. Yeah, my daughter gave me these. They used to light up, but the battery may have like given out. Oh yeah, yeah. You see they light up. Yeah, I mean, yeah, 100%. Um, Anthony says, I know that you can stream on multiple platforms simultaneously. I'll bet your viewers would like that. It may be worth having your. Yeah, I'm aware. Actually, I use StreamYard as my app, and I've been able to do that. But the audience seems slightly different for each. X doesn't allow me to schedule, um, and I have had a history of showing up at this time on YouTube, and people are used to showing up. I could do it on Facebook, but I might lose some functionality in terms of questions. And yeah, these are two slightly different audiences. They're two slightly different places. So yes, but we are aware of this, and thank you for mentioning it. Do I think SMCI will recover? Yeah, I don't. The folks that like chase price are always looking backward after a big boom to try and get it cheap. And I would tell you, if you go look at facts, you won't think about it like that. People, the biggest gains come when you don't expect it, and when you're not looking backwards, when you're looking forwards. And as I like to say, when you're looking forwards, you have this. A blank sheet of paper. Yeah, a blank sheet of paper. You got thin air, and ain't nobody going to tell you what's going to happen. It's very easy to look at a chart and be like, well, it went up this much, and there's the peak, and yeah, those are that's not the makings of big winners. Oftentimes, it's the making of big losers because you're not focusing on facts, you're not focusing on evidence, you're not focusing on research. You're just like really like essentially working within like a psychological operation of like, hey, that went down a lot, and so let me buy it. Yeah, so that's my view. I don't think we're not an SMCI. We sold it way too early. Somebody was on here last week and said they made a lot more money than we did, which we're very, very happy and stoked about. We made a small amount of money, but we will not be going back into anything like that anytime soon. What is up with Fannie Mae? Well, there's nothing formally up. What has happened is obviously the election results came, and if you watched the live stream from, I think whenever I did it on Fannie Mae, which was I think 2 weeks before the election, I told you, which is that President Trump had committed prior to the election to saying like, hey, if he's elected, these companies are going to be released from conservatorship. I think he's good for his word. And that is based on everything that was already done when he was president between 2016 and 2020, when they were pretty much on track to, I think, release them. And then obviously COVID happened, and then obviously he didn't get reelected. So it would be in some ways a continuation of like what was already in place. So the market is reacting to that, which is that when President Biden was in power, it was very clear that they had no plans to release them. Now that President Trump is President-elect Trump again, everyone is assuming that he's good for his word, and we are going to see them released. The preferreds are rocketing higher, and they're pretty much going back to where they were in 2019, which is right where they were, right at the point where they were planning for their release. So that's where we are. It is still a unknown in terms of like, is it guaranteed to happen? Not yet. They haven't made an announcement, and they can't. Why? Well, I mean, because he takes his oath, I think, on January 20th. So there's going to be something after that. But if you wait for that, you're going to miss out. Why? Because there's clearly enough people in the market that understand what this opportunity is, and they are going to make some calculations of where these companies are going to trade upon release, and they are willing to bid it up. And clearly, they think it's something north of 3. For Fannie Mae, for Freddie Mac, the preferreds are pretty close to 50% of par. So if you use that as odds, people are saying better than 50% odds it happens. So if you want like a probability scale, just track some preferreds, some liquid preferreds that trade pretty much every day, like FNMAT, FNMAS. These trade pretty much every day. And so the closer and closer these get to par, that tells you that the market believes that this is pretty much a done deal. Is 1 million in 2025 your conservative target? It's not conservative or you know, one way or the other. The supply shock seems to have these kind of like mathematical bounds, right? And in the last halving cycle, it undershot the mathematical bound of 100,000 by about 30. In the 2016 cycle, it overshot the mathematical bound of 10,000 by an extra 10,000, right? So we're very sensitive to these things because we are looking at it through the lens of our emotions. Of course, when prices go up, we cheerlead them up. When prices crash, we're in fear. But the mathematical thing sort of just like, you know, is responding to the algorithm of math, which is that 21 million coins. And if you apply this scarcity driven algorithm to it, you get to these sort of mathematical bounds, right? And those bounds can undershoot and they can overshoot. It's not a matter of like, you know, be like, hey, here is my very precise thing that tells you where it's going to be. It doesn't work like that. I mean, it could undershoot again, or it could overshoot, and it could overshoot by more than what happened in 2016. We don't know. We will have to find out. What determines the undershoot or overshoot? Well, essentially, people's enthusiasm, people's desire, people's greed. That's what determines that. I mean, if you remember in the 2021 cycle, at 70,000, we started to have like, you know, I think the FTX stuff started to like roll out, and you know, the Luna stuff started to roll out. So yeah, the desire, enthusiasm, greed was sort of like curtailed. So we never quite got to 100. We also didn't have as many ways to speculate on this. I mean, today, I mean, obviously the ETFs. I believe that today or tomorrow, there's going to the options on the BlackRock Bitcoin ETF are going to start trading. We've got MicroStrategy. There's leveraged ETFs on MicroStrategy. There's Bitcoin futures, which have been around. There are just so many different ways for money to come in and to own the same thing. And that's not even counting all the different things that can happen within crypto world. I mean, there's, you know, yield farming where you can go and deposit crypto and I mean, I was reading about this thing where you can use Yearn Finance and you know, you put money in, you get a deposit, you can use that to leverage. You can just do that, I think, at least 5, 6, 7 times and generate an extraordinary amount of money, which then you can bet. So I mean, we're just getting going. In hindsight, 1 million could be too little, too high, too low. We will have to see. There's no guarantees. It's going to be higher than here. That much I feel very certain about. Hey, Alex, thank you for attending the live stream. Please open door. I don't know what that means. Bald Man speculating, any new episode? I have a lot of episodes, but I just have to say that between ATG Digital, remember, we're a small team at ATG Digital, right? Including me, it's 8 people, right? And those 8 folks, we manage our website, manage customer service, the trades go out, analysis. So, I mean, yeah, I mean, and we put out, of course, you know, the Substack, YouTube. Ballman speculating is sort of like secondary in terms of content creation. I have lots of stuff that I want to, but I just never seem to find the time and or the energy to do it. But I will do something before year end. Yeah, I mean, there's a lot of different crypto out there. I'm aware of Hedera, and I looked at it, and there's going to be a lot of different ones that do well in this cycle. It could be one of them. Um, we don't own it. I have looked at it in the past. I think we're, like I'm more focused on the financial system ones, because I can sort of like characterize or visualize the upside, because it is replacing something that already exists. Like, for example, I laid out the potential for Curve. Curve essentially, will sort of like, is a substitute for foreign exchange, just like the stable coins are sort of like a substitute for money markets. So from there, it's kind of like easy to see, like, some human activity that we already do in large scale. I mean, the foreign exchange market, I believe, is one of the largest markets in finance. Money markets are huge. So, I mean, that's our focus, but we don't have an exclusive on, which crypto tokens are going to do well. Hedera could do completely great as well. Any idea on SMR? I mean, this stock has just pumped like crazy. But remember, I mean, it is essentially, in my judgment, this is a hype trade. And here's how I characterize a hype trade. A hype trade is where, like, you go and look at the company and they don't really have a business. They have a technology, they might have a platform, but they don't have a business. And that's what smart modular reactors are. I mean, they have a technology, but they can't say that they have a long line of customers. They can't say that, hey, I can tell you, with some level of, I don't know, forecasting that, hey, we're going to have 150 million next quarter or next year. This is a technology in very early stage. It's very promising. Clearly, there's a lot of excitement among retail investors for this technology. In my judgment, market makers and the insiders are using the news, etc., to move the price higher, which is great, of course, if you own the stock. But big money, institutional money, is not going to enter into something that doesn't have a business behind it, because everyone knows that very long-term gains are driven by business returns. So it's a very enticing, interesting technology, but it's sort of like a hype trade, in my judgment, in my opinion, similar to kind of like 3D printing in 2011. I mean, that trade went on for whatever, 12, 18 months. But then when sort of like the last buyers were in at the highest price, then, it was a long bear market. And at this point in time, I don't think there is a single commercial SMR reactor that is out there. They'd obviously have to go through a pretty long process of licensing and proving itself out. It's a new technology, would have to be proven to be safe. I've read a great deal about it, and I'm excited by it. But I've definitely learned my lesson, which is like, hey, in a world of enormous opportunities, I don't need to be in hype trades. I don't want to be in hype trades. I gotten burned recommending cannabis stocks. I got, you guys got crushed in it. So I don't really want to be in hype trades when I can find companies that have legitimate businesses that they built on technology. So that's my view of SMR and in general of the uranium trade across the board. All right. There was one more thing, but I'll leave it for next week, which is that I wanted to talk about Mankind Corp, which I've done a couple of live streams, but I'll do that next week because there's something big that's going on with that company that's going on. I did like a mini presentation for our 10K donors. These are the folks who helped us start ATG Digital very generously. And that's pretty exciting. So, but I'll leave that for next week. I think it'll hold. I don't think it's going to rock it up, today or tomorrow. It could, but there should still be enough upside. So, we'll see what happens next week. Either way, thank you all for attending this live stream. Check out ATG Digital for subscriptions. If you're looking for crypto related stuff, I'd say 25-30% of all of our tiers are in some way, shape, or form in crypto. So crypto tokens, crypto related stocks. Check us out, folks. All right. Thank you all for attending. This is Paul saying goodbye.